Please read this disclaimer carefully before proceeding further. Welcome traders to this week's analysis of our dollar index. My name is Vic. Thanks for joining me here. Dollar had a fantastic week. We were expecting market to go up a little bit and then fall back down. So let me give you a brief revision, like what actually happened. So the market was moving higher and we were looking for short entries into DXY around this place. It went there, fell back down, but then started to move higher. These levels were already there on our analysis, so market came right there in that level at 93.6 level here and failed to close on daily basis beyond that. And since then it has been falling. In the last week's analysis, I mentioned that there can be a little bit of upward movement, and then a move to the downside was expected to close this gap, and that's what market has done. In fact, it has gone past that particular level and it has fallen to this level, which was already there on our analysis, which is 91.970. How do you read these levels? All of these levels can act as support and resistance. So you can look at them as your profit targets, or you can start your new positions around these levels. You can also add to your positions or cut your positions around these levels. So depending on which direction you're trading them, they can act as support and resistance. So the market fell through this one and got supported by this one here. And if I show you what it looks like, the market is actually creating an M pattern. So it has just created an M pattern like this, which means that market is expected to go higher. So we are expecting DXY to move higher. Another reason is not just this M pattern, but because there is a demand zone here. And third reason is that there is a moving average here, which can also push the price up. We saw that there was a little bit of reaction there, and this reaction can actually push the price up. So if you are short on DXY for whatever reason, then make sure that you are managing your positions. And if you want to look for a long position, then wait for a confirmation here on smaller time frame and then look for an upward move. Now, where can it go to? Before we come to that, this is the one that I actually indicated to our FCB students, is that we had a head and shoulders pattern as well, and then market has actually broken through that, the neckline. It got tested here and then market has been falling down. Now it is quite obvious, the market may actually go back up a little bit before falling down any further. So in the previous analysis, I mentioned all the scenarios where it can actually fall down to even 90 level as well, because there is another gap left. So I suggest you go back and watch that analysis as well. It will be available on the channel and you'll find a link to that one in the description of this video as well. So go and check it out. But this week we can expect a move to the high side. It may not be a huge move to the upside, but it can be a correction sort of thing. So if you're looking for a short-term long opportunity, you can look for that. But be careful, because this zone is actually not a very strong zone. There has been a lot of choppiness around this, and when we have something like this, market has tendency to go through it to collect the stop losses, because there will be a lot of liquidity below this. So be careful with your stop losses, and be careful that you do not just start to take long trades. You just wait for a proper confirmation and have proper risk management in place as well. If I go to the weekly time frame once again. So on weekly time frame, we can see that the market has not been able to close above this, and it is falling down, which is showing up this sort of behavior. So market went up and now we are in a correction mode. It has come to the previous low here and it may go back up, but ultimately it is expected to fall down to this level, which is mid of the Bollinger Band. And let me actually give you that level as well. So if I come here and put a line, so this will be something like here. So let's go back and look at it. So this is the FCP zone where it can fall back down to. So be careful that on weekly basis it still can be bearish. It can fall to one of these levels here, and then ultimately it can fall to this FCP zone as well, where we have 200 moving average present. This is the gap where it can fall down to. This is near about 90 level or so. So we are expecting a little bullish movement, and let's check it on What Envisage. By the way, What Envisage is now available. If you want to subscribe to it, go to beginser.com, and you will find it here on beginser.com. So let's show you where. So come here, and I'll post a link to that in the description of this video as well. So you can come here and find all the videos, free training videos, strategies videos, features, FAQs, everything is available on this page. Right, so let's go and look at it on DXY. Sorry, this is Zoom. Let's look at it on DXY. Okay, DXY. Right, on DXY, what we have is that market has started to show a bearish indication. We are bearish now because the color is red. This is also red, but we know that the market actually tries to find support around water curve as well. So this line is still bearish, but market may actually fall down a little bit, test it, and then go up. That is a possibility. If the market breaks through this and we get a confirmation, then it is expected to reach this profit target, which is the white dot. And you will notice that what Envisage is also saying that it is going to be near about that 90 level where we have the gap. So this is the gap where we have, and if it falls down through that water curve, then only it will come there, because water curve will have the potential to push the price up. On the bullish side of things, this target is still available. So if the market in any case starts to move higher, then we are looking at this particular level here, which is going to be near about 94.5 level or so. So this is how it is looking on weekly time frame. Let's go and check out on daily time frame. On daily time frame, we had a very good signal. So we had bearish trend here, and then we had a signal here. It was slightly delayed, but that is only if you are looking for non-aggressive entry. Aggressive entry was made on this candle, and this was your first profit target, the water curve, and the second profit target was this white dot. So this was a good move all along, and now market has come here. It is possible that it will try to go back to retest that water curve. So whenever the price goes away too much away from water curve, it tries to go back to it. That's mean reversion strategy. So this is also supporting that it may actually go back up, but be careful. If it breaks through this midpoint, then we have another bigger M pattern which can push the price back to the 90 level, which we saw on the weekly time frame. So this is my analysis on DXY. If you enjoyed this analysis, found this useful, make sure to hit the like button and share it with other traders and trading communities. And I'll see you in the next one. Have a great trading week next week. If you're interested in learning how to analyze the markets the way I do using Fibonacci Confluence, then head over to beginser.com, and under training section you'll be able to see Core Strategy Training Program. On this page you'll be able to see the testimonials of previous students and also look at the brochure. The brochure has a lot more information, including the course structure and the Fibonacci Confluence Training Program curriculum. This is a very extensive program in which we cover basic core Fibonacci concepts along with the advanced concepts to analyze the markets with high probability. If you're interested in joining this program, come to beginser.com, and under training section you'll be able to see and submit this form.